This is Matthew Cratter from Trader University, and today I want to answer the question, how low will Bitcoin go? Now, obviously, Bitcoin is not a tame lion. It can do whatever it wants. It doesn't need to listen to a YouTuber or anyone else. And I think the most interesting thing about Bitcoin is the fundamental thesis for Bitcoin. If you've studied Bitcoin, if you've been watching my channel for the last few years and you know all the videos that are there, then you understand the fundamental underpinnings of Bitcoin, and you're not worried about reading the tea leaves, reading the charts, and figuring out how to price it in this dying, dirty fiat currency we call US dollar. So I think in many ways price is the least interesting part of Bitcoin, but it's the part that especially newcomers are most interested in, and especially during bear markets like this, there are a lot of questions around it. So I don't mind talking about that, but it's very important to understand the fundamentals as well, to realize, of course, that Bitcoin is volatile, and over the short term, it can do whatever it wants. But let's take a look and see what is reasonable and what it has done historically, and perhaps how we're in a different historical period right now. One of my favorite chart indicators for Bitcoin, and it's a very long-term indicator, is the 200-week moving average. So this is a chart. Each of these candlesticks is a single week of trading action, and the blue line at the bottom is the 200-week moving average of these weekly candlesticks. We can see that we've now completely mean reverted back to this moving average. This moving average is very important because it has never declined. It's always been upward sloping or positive sloping as the price of Bitcoin, even though it's been volatile, has obviously been more volatile to the upside over the past few years. Right now, if we scroll in, we can see that Bitcoin is trading right below this 200-week moving average. The moving average is currently at 22,362. Bitcoin is just $100, a couple $100, $300 below that. In the past, so for example, during the March 2020 crash, when the pandemic was becoming apparent, we really only spent 2 weeks below this weekly moving average. There were some very long little crashes underneath, and then it recovered very close to the 200-week moving average. Back in the bear market of 2018, we touched this moving average, but we really never spent any time below it. Obviously, March 2020 was a time of a lot of financial distress when even the Treasury market was selling off and the Fed was trying to save the liquidity and eventually had to come in and print money and become a buyer of treasuries and junk bonds and basically say that they were going to do whatever it took to stabilize the market. So this is a very important level. This is been a very good bottom indicator in the past in telling you, especially when you combine this with sentiment, and people are obviously very bearish now. And so we're back to that level, and that I think is encouraging. That shows that perhaps the worst is over. Maybe we have another week or two, according to this. Now, the problem with this indicator is that over the past 13 years, we've never seen a central bank this hawkish. We've never seen the U.S. Fed this hawkish over the 13-year period. So this time could be different, but at least we have mean reverted back to this level, and it's roughly 22,000 levels, the way to remember it. If you're finding this video helpful so far, please subscribe to my channel and give this video a like as well. Also, feel free to ask your questions in the comment section below. So that is the first indicator, the 200-week moving average. Now I'm going to look at something called MVRV, which we've talked about a little bit before. MV in this indicator just stands for market value, in other words, market cap, the total number of coins that are in circulation that have been mined in Bitcoin times the current price of Bitcoin. We can see that from Clark Moody's Bitcoin dashboard here, that the market cap right now is 421 billion, down from $1 trillion at the peak approximately. So that's the market cap. That's what MV will be in this formula. RV is what's called the realized value or the realized cap. It's just the sum of all those little chunks of Bitcoin that we call UTXOs multiplied by the price that they last moved at or were spent on chain. So you sum up all the UTXOs, multiply them by the price at which they last moved. This is obviously a difficult calculation, so I'm going to be relying on Glassnode as we see for this calculation. But if you're more tech savvy than me, maybe you can calculated by examining the Bitcoin blockchain. So what we basically will do is we'll take market value, in other words, the market cap divided by the realized value or the realized cap. When this is less than 1, it obviously means that Bitcoin is trading below its realized on-chain value. It's trading below its realized cap. Here's a great chart from woobull.com that shows the various points of this ratio and how it's traded over time. It's a historical chart, so we can see where it was back in 2011, 2012. This ratio got down to 0.39, and it has since then bottomed at increasingly higher levels. So back in 2015, it bottomed at about 0.55 or 55%. Back in 2018, early 2019, it bottomed at about 0.7. And then back in the crash of March of 2020, it bottomed at about 0.85. If you subscribe to Glassnode's weekly newsletter, this is a free newsletter that I get. I have no affiliation with Glassnode. I'm not a paying customer. I'm not being paid by them, but I do receive their weekly free emails. And in these emails, they have the current realized price. This has probably moved down slightly since then, since this was calculated, but it's roughly the realized price. So this is a good way to get it. Realized price currently, and again, this is the sum of all the UTXOs multiplied by the price at which they last moved on chain, and then divided by the number of Bitcoins. You get the price per Bitcoin. Realized value would be the total realized market cap. This would be the realized price per Bitcoin. So it's basically the same metric adjusted for the number of Bitcoin that are out there. Realized price 23,430. Very interesting that it's this close to the 200-week moving average as well. So what I thought I'd do here is I would apply the various bottoms in the MVRV ratio that we've seen since 2012 and apply that to the current realized price of Bitcoin to calculate what Bitcoin would trade at if it went back to that MVRV value. So what I'm doing is I'm taking the realized price of Bitcoin multiplied by the MVRV ratio from that year. So 2012, this is when Bitcoin was very, very young. It really only traded on Mt. Gox, and there weren't a lot of participants. And we can see that as institutional participation has grown, as Bitcoin adoption has grown, this ratio has moved higher, as we saw in the Woobull chart. So if Bitcoin were to go back to this 0.39 or 39% MVRV, we could trade as low as 9,161. If we went down to the lows of the 2015 ratio, we'd go as low as 12,000, 13,000. 2018 MVRV was 0.7, again higher. The bottom would be 16,400. And we can see even in 2020, with all that distress, we only traded down to about 85% of the realized value. That would take us just below 20,000. And these are the two reasons I've been saying that I thought Bitcoin would hit somewhere between 20,000 and 22,000. I was looking at MVRV, and I was looking at the 200-week moving average. So we're basically there in terms of the 200-week moving average. We're not quite there in terms of where we would hit if we went down to the ratio, the lows of the ratio, 85%, which was hit in 2020. Obviously, 20,000 is a key level for Bitcoin because it was the previous all-time high. And we're reaching the point where a lot of even long-term hodlers like Michael Saylor and MicroStrategy are underwater. The last I saw, Michael Saylor is underwater by about $1 billion or a bit more. Again, there's no risk of him having a margin call. His margin call levels are much, much lower. I believe they're 10,000 or so. There's been a lot of FUD and fake news about this, but I wouldn't worry about Michael Saylor if I were you. He's going to be fine, and MicroStrategy is going to be fine. The one wild card here, as I said at the beginning of the video, is Bitcoin has never seen a Fed this hawkish in its 13-year history. And I want to alert you to some new overnight news that we got. So as of yesterday, Fed funds was pricing in a 50 basis points hike when the Fed meets tomorrow on Wednesday. And this has moved very sharply overnight. It's moved from basically pricing in a 50 basis points hike to a 75 basis points hike. There's now a 92% chance that the Fed will hike 75 basis points tomorrow. I would say there's basically a 100% chance that this is going to happen. So the current Fed funds, which are these very short-term interest rates that the Fed is able to set, is currently trading between 0.75% and 1%. a 75 basis point hike would take that range to 150 to 175 basis points. In other words, 1.5% to 1.75%. It looks like this is going to happen. The reason we can be pretty sure this is going to happen is because the Fed leaked this information to the Wall Street Journal to allow the market to digest it before it happened. So this is an article that came out late last night that the Fed was going to consider a 75 basis points hike. This has been priced into Fed funds. And if the Fed does not hike 75 basis points tomorrow, it'll be considered extremely dovish. So I would expect this to happen. What's also happened as a result of this Wall Street Journal article is the market has begun to price in 75 basis point hikes going forward. So we can see here, even for the July meeting, the July 27th meeting, that there's a 76% chance that the Fed does another 75 basis points, and it will almost certainly at least do 50 basis points. There's a 22% chance it only does 50 basis points. So what we're seeing, we saw very high CPI numbers on Friday. We're seeing a Fed trying to get ahead of this and maintain its credibility, even though it is a pathetic, evil institution. It's trying to get ahead of this. In the process, it's tanking all asset prices. This is the one wild card for Bitcoin, and this could lead, if the Fed really continues to do this and perhaps even telegraphs 100 basis point hikes, we could definitely see Bitcoin move down below 20,000, down to something like 15,000 or so. We could see spike lows perhaps overnight while we're all sleeping. So I would encourage you, don't focus on the price of Bitcoin. Don't watch it. We're basically at fair value now. There's going to be a lot of volatility. It may take a while for it to bottom. We could see spikes down to 15,000. I'm still working those limit orders. My limit order to buy Bitcoin at 25,000 was obviously filled yesterday or the night before. I still have a limit order at 20,000, and I've been dollar cost averaging as much as I can in addition to this. I probably should set a limit order down there at 17.5 or 15 as well. We could see some sort of forced liquidation. Again, Bitcoin can do whatever it wants. But I think the good news is we're basically at fair value here. We've reverted to the mean. There could be some volatility around this mean. We could spend a couple weeks down here. But I think that the worst is over for Bitcoin. And if you understand Bitcoin, you don't have to worry about this. You can relax. But you have to understand the environment we're in, which I think this chart of the price of gold in Weimar marks and Deutschmarks is very interesting, because we know that Weimar hyperinflated after World War I. The price of gold basically went from about 1 in Weimar marks to 1 trillion. But in the process, this red line is the monthly returns. So gold was extremely volatile as it went up from basically 1. I guess this is indexed, where 1914 is the price of gold is 1 Weimar mark, but it went from 1 to 1 trillion. So you had hyperinflation, you had the destruction of the currency, but along the way there was incredible volatility. You had months where gold was up 80%, where gold was up 150%. This is the kind of thing that could take us Bitcoin 100,000 or 200,000 just in a month or two. But you also had very deep down months as the Weimar Central Bank tried to figure out what to do, as they loosen, as they tighten. And the Fed's in a very similar position. This leads to tremendous volatility. And this is why it's very important not to use any leverage with your Bitcoin. And of course, not to own all these altcoins that are in the process of being destroyed, like the Celsius token, like Terra Luna, etc. All altcoins trend to zero against Bitcoin. And this is what's happening to Ethereum as well in this cycle. Bitcoin is the place to be to protect yourself from central bankers and from hyperinflation. But it's going to be a volatile path. If you try to pick the tops and bottoms, it's very unlikely you're going to be able to do so. So I recommend instead, if you've done your research, to instead dollar cost average, maybe set up some limit orders in addition, as I have done. And if you put those limit orders in, they can be filled while you're sleeping, and then there's no reason to watch the price. Watching the price is a waste of your time. You either own this for the long term or you're a short-term trader. If you're a short-term trader, you're insane to be trading it in this kind of environment where just a word from the Fed can move it quite a bit. If you're a long-term investor in it, why are you checking the price? If you're going to hold this for 5 years or 10 years or for the rest of your life, as I'm going to do. And I hope that my grandchildren and my great-grandchildren and my great-great-grandchildren are still holding the same Bitcoin. I'm certainly not going to sell any during my lifetime. So what I find useful during these bear markets, during this volatility, go for a hike, get out in the woods, go to the beach, spend time with friends and loved ones, and also spend time doing research, understanding what you own. Watching the price isn't going to tell you anything significant. You can check the price once a week, once a month, something like this. I have to check it more often simply because I'm making these videos, but I wish I didn't have to check it at all. I would literally never check it. I would just put in orders to buy it and dollar cost average in, and not really pay any attention to the price. So I think the best thing you can do during a bear market like this is to focus on the fundamentals. I have hundreds of videos about Bitcoin on this YouTube channel. You can just click on the video tab and see all of them. Spend your time doing the research, understanding Bitcoin at a very deep level, and then you'll sleep really well at night, as I do, knowing what you own. And if you don't own dog coins, if you don't own VC coins, if you don't own Ethereum garbage or Ripple garbage or Cardano garbage or Celsius garbage, you will do very well indeed. You'll be able to enjoy time in nature with your friends and family. You won't have to be watching your account all the time, and you'll know that your Bitcoin is safe, especially if you've withdrawn it from the exchanges and you hold it on a hardware wallet, which I also talk about on this channel. You can read more about self-custody, listen more about self-custody in yesterday's video, where I linked to a couple of videos about how to hold your own Bitcoin so it doesn't get frozen or stolen, as happened with Celsius. When you've watched all my YouTube videos and you're ready to take it to the next level, you can also check out my paid course, The Ultimate Guide to Bitcoin, which I'll also link to below. But I'd first encourage you to take advantage of all the free material I've put out there and really use this bear market as a time of education and stepping away from your screen and focusing on the more important things in life, which are your friends and your family and your relationships. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.